Many people think that I've been able to create a lot of passive cash flow because of the knowledge I gained during my 10 years as a financial planner. They use that as an excuse. Well, I cannot create passive cash flow like you did because I don't have that background as a financial planner. I want to make it very clear that I achieved financial freedom 20 years after I stopped being a financial planner. And it was the false beliefs that I learned as a financial planner that actually prevented me from achieving financial freedom sooner. The first false belief that I had to break was the mental belief that the financial planning industry is there to help me create wealth. This should make sense even on the surface. The companies we invest with, such as Fidelity, Edward Jones, Charles Schwab, and all the rest, are publicly traded companies, and they want to make a profit for their shareholders first. It's more important for them to make money from you than it is for them to make money for you. And that makes logical sense. It's disappointing, but it makes sense. But I want to share a story that goes a little deeper. It was one of the last things that drove me away from the financial planning industry. Based on my sales results in the industry, I was asked to join a committee of about 12 distributors to create a new financial product for one of the largest financial firms in America. I remember sitting in the executive offices and one of the upper floors at their Houston company and presenting our product. Based on the design, it should generate an average return for investors of 16 to 18% per year. We were pretty happy with that. We were pretty happy with what we had developed. The executives paused after our presentation, and then they responded, "Well, that's very nice, but investors are pretty happy with a 10% average annual return. We can adjust the product to pay them a little less so that the agents and the corporation can earn more." My heart sank. I got into the financial planning industry to help people create wealth and financial freedom. It was at that moment that I realized the corporations were not on the same page as me. That false belief that the financial planning industry was there to help me create wealth was the easiest false belief for me to break. The second false belief that I had to break was that I could protect my portfolio with diversification exclusively within the stock market and the securities market. You've probably been told that proper diversified portfolios are essential to provide you with protection. And perhaps you were told to balance your blue chip stocks with some tech stocks and some international stocks and maybe some utility stocks or something like that. And for the stock market portion of your portfolio, that makes sense. However, you need diversification outside the stock market. Here's why. The value of stocks is based on a formula. One of the components of that formula is a rate that's based on interest and inflation. As interest rates or inflation change, the price of all stocks change together. Now, a lot of them move up and down individually from time to time. There's exceptions. If one stock in the pharmaceutical industry has a big cure for cancer, they're going to increase even if everything else is decreasing. But for the most part, the stocks move up and down together. That's not diversification. So the expected future profits of any company are still going to reduce when the interest rate goes up. So being a math nerd and highly analytical with the numbers, it was not too hard for me to break that false belief that you could diversify entirely within the stock market. The third false belief that I had to break was the education that I'd received regarding wealth being the value of my assets or a magic number that I had to achieve. This one was harder for me to break because it is math, and I believe math. However, you'll see the problems in a minute. You'll probably have seen these before, but most financial advisors try to predict how much money you'll need for retirement, and many call that your magic number. It's based on what your expenses will be 20 to 30 years in the future, which is a guess. It's based on how long you will live, which is a guess. It's based on how much you can pull out of your pile of money to pay your expenses, which is a guess. And based on that formula and the four numbers that they guess, they tell you how much you need to set aside every month in order to achieve financial freedom, or that magic number, in 20 or 30 years. The single biggest revelation in my journey to financial freedom came when I realized that I should not be trying to create a pool of money decades into the future. I should be creating a stream of money that starts now. Once that stream of passive cash flow is high enough to cover my current expenses, I have financial freedom now. Once that stream can increase with inflation and it's created so that I cannot outlive it, then I'll have financial freedom forever. If you take away nothing else, make sure you understand this. When I changed my focus from creating a pool of wealth in the future to creating a stream of passive cash flow now, I was able to achieve financial freedom in less than 5 years instead of 20 to 30 years. The fourth false belief that I had was probably more inside my head than something in the financial planning industry. I had to clarify the distinction between growing wealth and creating wealth. I thought the stock market was how you created wealth, a tool that enabled you to start with almost nothing and turn that into financial freedom. That is a false belief. You can grow your wealth in the stock market if you're lucky, but you cannot create wealth. Wealth is created in other areas. So go find any list of the richest people in America or the richest people in the world, and excluding those who inherited their money, how did each of them create their wealth? Most of them created it by starting a successful business. The rest created their wealth with real estate. That's it. Those are the wealth creators. I heard a great saying, wealth is created with concentration. Wealth is protected with diversification. Everyone who has created wealth did so by concentrating on a specific area, which could be starting a business, or it could be building a real estate portfolio, or even by focusing on their profession, such as being a doctor. You can create wealth. However, that wealth is protected by diversifying their wealth into other assets, such as the stock market, real estate, agriculture, gold, and so on. Achieve financial freedom faster by creating wealth, not just growing what you have. Achieve financial freedom faster by focusing on cash flow, not just growing a pool of money. Achieve financial freedom faster by breaking false beliefs and bad habits. Achieve financial freedom in 5 years or less instead of 20 to 30 years. The bottom line, with nearly 10 years as a financial advisor, these false beliefs were ingrained and reinforced daily. It was not until I got away from that industry that I was able to start breaking those false beliefs. And then I can create wealth in financial freedom. Hopefully, you can break those false beliefs faster than I did. Then you can create financial freedom. Before I finish the video, please take a second to like the video. If you haven't already, please subscribe so you get more fresh content on how to build passive cash flow. Finally, if you have any family or friends who would like to improve their financial position, please share this video with them. Thanks, and I appreciate that.